Here to help break down the quarter, SVB MoffettNathanson's Michael Nathanson, who maintains a market perform rating on the stock. He did increase his price target to 350. And we also have Cowen's John Blackledge. He has a buy rating, calls it his top large cap pick for the year. Michael, let me start with you. And usually I love to talk industry with you, and we'll get to that. But let's just talk stock price. You know, how do you go about right now valuing Netflix? Is it a free cash flow story? Is it that what you're looking at in terms of trying to determine the trajectory of the stock price, or is it still something else?
No, David, thanks. Great being here. That's exactly it. You know, all these years we've talked about Netflix, there's always been like a 10-year story out. Now we see cash flow. We have earnings that are close to cash flow. It's much easier to evaluate. We look at free cash flow yield. We look at earnings per share relative to other stocks. And our world is fairly valued using those metrics, right? So the way I look at it is much easier now because we have really good data points we can compare to other stocks. So that's what's changed for me and how I evaluate.
All right. And so to that point, what they're talking, they raised their free cash flow guidance for the year, I think, to $3.5 billion. They've cut their content spend a bit, or at least it's not going up by very much. You know, what does it look like going out then, in your opinion, Michael? And why is it only, I guess, a market perform?
Okay, here's why. Because we look at the cash flow and earnings a couple years out. Let's call it a $20 per share earnings story in 2025. Dave, I look at all the other options. I look at the S&P where it trades. We give them a premium to the market. We get to 350. It's not complicated anymore, right? It's not hocus pocus. It's earnings per share. And I think the debate's going to be what's the right multiple. I think the street, bulls, bears, neutrals like me are all in the same place. It's all about what multiple you want to put on it, right? And that's been the big game change, is that we have earnings and we can look at the earnings and just compare it to other options, right? So that's how I get here. Premium to the market 2 years out. You know, we can debate whether or not that's right.
Yeah, John, you're a little more excited about the Netflix story, right? It's hard to know, like, if it's a saturated market or not. They put out a chart which shows only 9% of total screen time in the U.S. and the U.K. markets is spent on Netflix, 5% in some of the emerging markets like Poland, where they're growing quickly. Is that part of the thesis here, that there's just a lot more room to run?
I think so. I mean, they've been talking about engagement as that's a huge focus area for them. And they talked about it a lot last night, to your point. They think there's room to go there. And they have some initiatives this year that I think can drive numbers, and maybe numbers above where we are. And one of them is paid sharing, which, was a big topic of discussion going into the quarter. And then also last night. And they said, hey, we're going to roll out paid sharing more broadly in 2Q. That was a 1 quarter slippage. So rolling it out in the U.S. and the largest markets in 2Q. I thought they were constructive on the 4 markets that they rolled out in the first quarter. Canada being one of them, which they said, hey, it's going to be it's a good proxy for the U.S. And they said since they rolled out Canada, the Canada revenue and member growth is above kind of U.S., which is now going to be rolled out in 2Q. I just want to talk about our work that we published 2 weeks, I think it was 2 weeks ago, from our TD Cowen proprietary survey. It said 21% of borrowers in the U.S. would become new members. 16% of borrowers would have the existing paying member pay. What does that work out to? You have 30 million UCAN borrowers, households. If 21% become new members, that's about 6 million new members, which is well above what we have. So the next couple of quarters are going to be very interesting to see how paid sharing helps drive revenue reacceleration and potentially could drive numbers higher on the street.